Hey there YouTube. So in this video I wanted to cover the IRS Form 8825. This is used to report rental real estate income and expenses for a partnership or an S corporation. Okay, so what a lot of people are familiar with is this other form. Let me flip over to really quick. This is Schedule E, supplemental income and loss, used to report rental real estate income for individual taxpayers. So if you're an individual taxpayer, we have John Q here, and you're filing a Form 1040 and you own rental property, you would attach Schedule E to your Form 1040, and this is where you would report the income and expense for each of your properties. So in this example, John has 2 properties, and he reports the income and expense in each of its corresponding columns there. So if you have rental income or expense, you're not going to be using a Schedule E if the rental property is owned in a partnership or an S corp. So in this example here, we have an LLC that was formed by 2 members, Rental Real Estate Partnership LLC. And so this LLC needs to file a Form 1065 partnership tax return every year. And when it files its Form 1065, it's going to attach 8825 to report the income and expense. So let's flip up to page 1 of the 1065, and let's also move over quickly to the actual financial statements for this LLC. So here we have the company's financial statements, Rental Real Estate Partnership LLC. Again, this is a 2-partner LLC, so we have member 1 and member 2. Each member put in $75,000 in cash. So that was their initial equity contribution to get the entity up and running. And then what they did is they went out and bought a single-family home. It's 999 fake rental property, right? That's obviously not a real address, but they bought a single-family home for $235,000. And so they recorded this on their books. $200,000 was attributed to the building, and then the land portion was $35,000. Now, why did we split those out? For those of you that are familiar, you know that land is not a depreciable asset, right? So when you purchase rental property, whether it's a single-family home or it's commercial real estate, you have to bifurcate the amount of the building from the purchase price versus the land, because the land is not depreciable. So in this case, they've done a $200,000 to $35,000 split out of the $235,000 there. They also finance the property, so this is the carrying balance of the note at the end of the year. And again, these are all balances that we're going to need to complete the Form 1065 tax return. Okay, so let's jump over the P&L. So here's the real estate P&L for the year, right? They generated $32,000 in rental income. And then these are their various expenses, right? So they had some miscellaneous expenses, security costs, supplies, and so on and so forth. Mortgage interest, $4,054, right? That was the mortgage interest paid on the note. And then the depreciation expense here, this is that non-cash expense, right? The amount of depreciation expense for the property during the year. They also recorded this on their internal books just to be consistent with the tax return, right? And so their net loss for the year was $8,900. Okay, so now that we have the financial statements prepared, let's jump back to the 1065. So this is a standard 1065 partnership return, right? The rental real estate partnership LLC name, tax ID number, address. It's an initial return because this is our first year. Now you note that page 1 is blank, right? This is normal. So page 1 of a Form 1065, this is where you would report only trade or business income and expense, right? So rental property income is not an ordinary trade or business, right? It's technically a per se passive activity, so it gets reported separately, right? That's why we have the 8825. So if you have a real estate partnership LLC and you get a return like this and you're thinking, wait a minute, my tax preparer did nothing, it's blank. No, this is normal. You're going to see these fields here will be blank because you don't have an ordinary trade or business, you have a rental property business. So page 1 is blank. The other pages, the questions are completed as follows, and then you start to see some information in Schedule K and the balance sheet. So Schedule K, this is a summary of the partners' distributed share items. We'll come back to this, but effectively this summarizes kind of the totals that you're going to see on the Schedule K1. So the net rental real estate income or loss, that's the $8,900. So the balance sheet here, I always recommend completing the balance sheet. There is a rule that says if your total assets and your income are under a certain threshold, you don't have to do this. As a best practice, I always recommend doing it just because you want to see some sort of reconciliation with Schedule L versus what you have on your internal financial statements, right? Ideally, they should match up. Your balance sheet per books here should reconcile with what you have here on the tax return, balance sheet per books, right? So we have the cash, the building itself, the amount of depreciation for the year, the land, again, not depreciable, and then the mortgage balance at the end of the year, and then the ending equity accounts for the partners. So let's go back to the 8825. Again, the format here very similar to Schedule E for individual taxpayers. It's effectively the same thing. You're reporting the address for the property, the type of the property is, what Code 1 is for single-family residential homes. It does have Code 1 through 8 depending on, if you have a different property type, but in this case it's Code 1. Fair rental days, we bought it at the start of the year, rented it throughout the year, so we put 365. And then column A, for property A, the rents, expenses, right? All of this should line up with what you have on your internal financial statements. And then the net income or loss for the property at the end of here, again, $8,900 in losses. And this is the amount that flows through to Schedule K here, line 2, right? Net rental real estate income or loss. And it even gives you a nice little note there, attach 8825 if you forgot to do that. So, and then at the end here, right, and this is a two-partner LLC again, so we have member 1 and member 2. Each member gets an allocable share of the net rental real estate income or loss. And member information, their percentage ownership in the company, and then down here, the capital account reconciliation, right? Again, remember, each partner contributed $75,000 in capital, their allocation of the net income or loss for the year, and their ending capital account. So fairly straightforward. The main point here is if you do have rental real estate income in an LLC that's either a partnership or an S Corp, you're not going to have a Schedule E supplemental income and loss like you would for a regular Form 1040 taxpayer. You're going to have this 8825 instead. So all the income and expenses reported here. And then again, remember that page 1 of the 1065, expect that to be blank. If you were reporting rental income or loss here on page 1, that's incorrect, right? You need to report it on the 8825. And again, it's separately stated and flows through to Schedule K on line 2, net rental real estate income or loss. Okay, so that covers it. Pretty straightforward video on this 8825 form. Hope you found it was helpful. If you have any questions or comments, please leave me a comment below. Happy to answer those, and I look forward to seeing you again soon. Thank you.